All right, let's talk about BigBear.ai, stock ticker BBAI. Lately, this little AI company has been popping up everywhere. Its stock price is running, it's trending on StockTwits, and retail traders are throwing around words like short squeeze and the next Palantir. But here's the question: what is Big Bear really? What do they sell? How do they stack up against Palantir or C3 AI? And why are insiders selling while retail traders are hyping it up? Let's break it down together. What does Big Bear actually do? So, Big Bear AI calls itself a decision intelligence company. That sounds buzzy, but here's what it actually means in practice. They build software that helps government agencies and defense contractors take massive amounts of raw data, like satellite imagery, logistics info, troop readiness data, border surveillance feeds, and make sense of it. One of their platforms, called Orion, is used by the military for planning exercises and readiness testing. Imagine you're the army and you want to know what happens if we move these units here and supply lines get cut there. Orion runs those scenarios. They also sell computer vision and anomaly detection tools for homeland security. Think about monitoring a border or an airbase and have an AI flag unusual movements or risk. And on the commercial side, though smaller, they push supply chain and manufacturing optimizations, forecasting where bottlenecks or delays might pop up. Now, here's where people get confused. They lump Big Bear AI in with Palantir and C3 AI, but the approaches are different. Palantir is like the heavyweight champ in government AI. Its Gotham platform integrates everything from spy data to logistics into slick dashboards that agencies love. They're already profitable and they've nailed contacts with the Army, the CIA, and even commercial companies like Airbus. They're playing the long game with scale and brand recognition. C3 AI is more of an enterprise AI player. They build a platform companies can customize, oil and gas firms, banks, manufacturers. They're not really defense first like Big Bear, but they market the flexibility of their AI suite. Big Bear is much smaller. They're scrappier, focusing heavily on specific defense use cases. Instead of building one massive universal platform, they position themselves as a plug and play solutions shop for the Pentagon or Homeland Security. So the contrast is scale. Palantir is a juggernaut. C3 is enterprise wide, and Big Bear is trying to carve out a niche. We'll solve your mission critical problem fast. Okay, so here's a quick history lesson. Big Bear AI went public in 2021 through a SPAC merger with Gay Capital 4. Like a lot of SPACs, the hype didn't match the execution. Since then, they've shuffled leadership and they've grown their contract backlog to about $380 million as of May 2025. On paper, that looks good, but backlog is just potential. You still have to turn it into cash revenue. Financial reality check. Here is where things get messy. Let's look at the recent performance of Big Bear. Q2 2025 revenue came in at $32.5 million, down 18% year over year. That's not great. Earnings per share were a brutal negative 0.1 compared to analyst expectations of negative 0.06. After that, management cut full year 2025 guidance down to $125 to $140 million in revenues. They reported a net loss of $228.6 million in Q2 alone. And while they ended the quarter with about $391 million in cash and cash equivalents, losses of that scale raise serious concerns. Okay, so here's the bottom line. Trailing 12-month revenue sits around $152 million, but net margin is about negative 291%. That's not just unprofitable, that's bleeding. And it's not just one bad quarter. Big Bear AI has missed earnings expectations in 3 of its last 4 earnings calls, often by significant percentages. That track record makes Wall Street nervous. Valuation Snapshot. Now, the wild part. Despite shrinking revenue, Big Bear trades at a price to sales multiple of around 12 to 17x. Wow, okay. So compare that with C3 AI at about 6.6x sales and Palantir at a sky high, I think that's an understatement, 126 times sales. But remember, Palantir is profitable. We can give them that. So Big Bear is valued more richly than C3.ai, even though C3 has more than double the revenue in a broader customer base. Investors are paying up for the AI defense story, not the numbers. So who owns the stock? Ownership details are less transparent. What is clear is that retail investors make up the majority of the float. Institutional ownership is present but limited, and insider ownership is very small. The float is highly available and short interest has been reported at around 20%. That's why people are whispering short squeeze. Analyst ratings. Wall Street, pretty lukewarm. Consensus is moderate buy. Price targets average around about $6 per share with a range from $3.50 to $8 per share. So if the stock's trading higher than that, analysts are basically saying, be careful. Now, here's the fun part. Big Bear is trending on StockTwits with almost 48,000 followers. Message volume is up massively. And the posts, they're wild. This is Palantir 2.0. Shorts are toast. If it breaks $5, which it already has, it's heading to $10 per share, they say. But there are some who are more cautious. One says, don't chase. This is all hype. Wait for real earnings. So you've got one crowd targeting this like the next meme squeeze, another crowd hyping contracts, and a few cautious voices reminding people the fundamentals are ugly. That mix of hype and caution is exactly what makes these trades volatile. It's FOMO versus fear. Competitors and contrast. Okay, so to really understand BigBear.ai, let's stack it up against the two names it always gets compared to, Palantir and C3.ai. Here is a quick side-by-side. BigBear.ai, defense AI decision intelligence for government and supply chain. Market cap about $2.5 billion. Trailing revenue of about 152.6 million. Net margins of about negative 291%. Value at around 12 to 17x sales. Their strengths, specialized defense and government focus, and a $380 million backlog. Weaknesses, shrinking revenue, and heavy losses. Palantir, the heavyweight. Government and commercial analytics platforms like Gotham and Foundry. We've covered this in our previous videos, so if you haven't seen that, we have a whole documentary on Palantir. You should go watch that. Their market cap of about $430 billion far outpaces Big Bear, which is great if you want to invest in Big Bear today so that it can eventually get to that high. So that's a plus for Big Bear. Now, revenues of Palantir are over $3.4 billion and they're profitable. They have a price to sales multiple of 126 times, which is insane, but hey, if you want to invest in that, that's all you. So what are their strengths? Scale, brand, and sticky government contracts. Weakness, it's already priced for perfection. Okay, so C3.ai, enterprise AI across industries. Market cap of $2.5 billion, revenue of about 380 million, and still unprofitable. They're valued at 6.6 times sales. Their strengths, diversification and customizable AI. Weaknesses, slowing growth and struggling adoption. So Palantir is the gorilla, C3.ai is the platform shop, and BigBear.ai is the scrappy niche player trying to prove it belongs in the ring. And right now, retail traders are betting that this underdog can punch above its weight. So where does all of this leave us? BigBear.ai is the underdog in the AI defense fight. It doesn't have Palantir's scale or C3.ai's broader enterprise reach. What it does have is focus, a laser aim at defense and government contracts that makes it exciting in theory, especially if you believe that future wars will be as much about algorithms as armies. But here's the problem. The fundamentals don't back the hype. Recent quarters show declining revenue, huge net losses, repeated earnings misses, guidance cuts, and analysts pointing to lower price targets. Compare that to Palantir, which is profitable, or even C3.ai, which at least has broader revenue, and Big Bear looks fragile. So why is the stock running? Retail energy, of course. On StockTwits is trending. Traders are posting about short squeezes, about $5 per share breaking to $10 per share, about this being Palantir 2.0, and with most of the float in public hands, that sentiment alone can move the stock. But remember, being the underdog is a double-edged sword. Sometimes the little guy shocks the world, and sometimes they get knocked out in the first round. Right now, BigBear.ai is less of a steady investment and more of a high-stakes bet. If you're here, you're not buying a sure thing. You're betting that the underdog can land a big punch before the clock runs out. As always, I would love to hear what you think. Are you siding with the retail crowd chasing the short squeeze, or are you with the analysts who see weak fundamentals and more pain ahead? Drop your thoughts in the comments below. I want to know if you think Big Bear is the next Palantir or just another SPAC flameout. You know, I'm all for SPACs. I've made lots of money in SPACs and sharing that with my patrons. So I hope that this all works out. Anyway, thanks for watching. I'm Lincoln with BoAcademy.org. Thank you again, and I'll see you in the next one.